So the big question that everybody is asking right now is, are we entering into a bull market? What's going to happen next? So in today's video, what I want to do is dissect the market and really dig into the different pieces to see what are the things that we need to see going into 2024 for there to be a bull market. Are we there right now, or can we get into one in a little bit? That's what we're going to find out in today's video. So before we even get started, what we do need to really take a look at is a couple things. Number one, if you actually look at the general indexes, the QQQ, the SPY, the Dow, all of these have been in an uptrend for the last few weeks. Now, just because you've been in an uptrend for a couple weeks does not necessarily mean that you are in a bull market. It just means that you've been trending on a short-term basis. But if we look at the overall pictures of the QQQ and the SPY, what we have starting to see is a breakout to levels that we haven't seen in a little bit of time. And so when the market starts to break out of these technical bases, that is bullish for the market. But there are a couple things that I find really interesting right now that we need to keep an eye on. First of all, there's TLT. So TLT is an instrument that measures the price of bonds. And as you can see, throughout the last couple years, TLT has been going down big time as interest rates have been going up simultaneously. So when interest rates go up, TLT goes down, and that's bad for the markets. Why is that bad for the markets? Well, markets love liquidity. They love free money. We used to call that Helicopter Ben back in 2008. Helicopter Ben was Ben Bernanke. He used to make it rain with money printing. We did things like quantitative easing, 0% interest rates, mortgage-backed security buying, all sorts of things, and he rained money all over the place. Markets love that because that money has to go somewhere. So where does it usually go? Into assets, and props them up into bubble-like scenarios. Markets live for that stuff. We no longer operate on this kind of market cycle where it's like about earnings and good companies and good management and things of that nature. What the market has become since 2008, since that big financial recession, has been more about market liquidity and cheap money funneling buying versus actual fundamentals. And that's always a shift. In every generation, you have different things that work, and that's been our thing now. If you look at the market during COVID times, right, we thought the world was ending. What happened with the markets? There was so much free money going on, right? Those stimmy checks, right? You guys remember that? People be on their TikTok talking about what I'm gonna do with my stimmy, right? People are going out there buying iPhones with their stimmy money. The Federal Reserve, old Jerome Powell, started cutting rates, flooding the market with trillions of dollars in liquidity, and then the federal government did the same thing with all these stimulus money, and we got a huge asset run. Now, of recent, because of inflation, those assets have been deflating because we have to raise interest rates to deflate inflation. So as interest rates have been going up, the market has been going down. But the big hairy Indian butt is that of recent, Uncle Jerome Powell and many of his subordinates like old Bob Barker and some of these guys, they have been talking about how we've probably reached some type of equilibrium between inflation and interest rates, and they are starting to possibly consider that we may not have to raise any more. Now, they haven't come out and said that they're gonna cut rates, right? They've actually been pretty candid about the fact that they think that inflation is still too high, but that it's getting into the right spot. But remember that markets are forward-looking mechanisms. So just the hint of it can be enough. So if we look at the price of TLT, we start to see, right, that now you're in the 90s, you're starting to trend up. And so going into 2024, what we want to see is a few things. We want to see these indexes remain right up at these breakout spots. We want to see TLT keep trending to the upside. And I think this is going to be the key. If you look at the IWM right now, it has been in this big base for like a year. There's a lid right at $200, and it's come up and ran into that quite a few times. This is going to be the tell, because 2023, even though it was a bull market, it was really just a bull market of like 7 stocks, right? Meta up hundreds of percent, Nvidia up hundreds of percent, AMD up hundreds of percent, Microsoft up hundreds of percent, so on and so forth. But the other companies, the more general indexes, something larger like the Russell 2000, which is represented by the IWM, no movement. But today we saw something pretty cool. You finally got a break and a close over the 200-day moving average. You had a 3% move in the IWM. If this holds and starts making its way into the 200 spot and breaks above, then I think that 2024 could be gangbusters, because if you look at the economic data of recent, unemployment is starting to go up. People are feeling the pinch. If you see credit card debt starting to go up, if you see auto delinquencies, home delinquencies all going up, people are talking about recession. People are feeling their pocketbook. Heck, even I'm noticing these things, right? When I talk to my customers, when I talk to my students, right? They're feeling the effects of high mortgage rates on their HELOCs, their auto loans, their student loans, right? So many different things, and people are feeling it across the board. When people are feeling bad, usually the market gets a little bit giddy. Why? Helicopter money, right? Because if the economy starts to crash down and regular people just get hurt in the pockets, well, that's when the bankers make their money, because the Fed will start to cut interest rates, flood the market with money, and it's a terrible thing, right? It's like bad news is good and good news is bad. We're living in this bizarro world of, we're living in this Costanza world right now, right? Where good is bad, bad is good. But these are the things that we want to be watching. I want you to watch the IWM and look at these speculative names. If they start to trend, the names like CVNA and AI and IONQ and these kind of names that when the market gets hot starts to really, really cook, that's what we want to see. You start seeing names like W, Etsy, any of these kind of names start to really make a trend, and we've got signals that they could happen. They've got huge bases right now. Then 2024 could be a hot year. Now, one thing to be remembered is that oftentimes groups of stocks, when they're hot one year, they become dogs the next year, and things that are dogs one year become hot the next year. So you want to look for these bottoming type of stocks, like things that have been beaten out, like these solar names, right? ENPH, SEDG, SunPower, names like Carvana, Etsy, W, right? These just beaten down charts. If these start to cook, that's then you know it's going to be an actual market of stocks versus just 7 big boys going up and then everybody twiddling around, wondering if anything else is going to move. So we've got some positives. We're not necessarily there yet, but things are building. And remember, everything you hear in the news right now is going to be recession, war, unemployment, all this stuff, delinquencies. It's going to sound terrible. Oftentimes when it sounds terrible, it's good for stocks. Guys, let me know if you have any questions about this. I love hearing from you guys. Take care.